What is up, everybody? Good morning. Welcome to the morning show here on Stock Market TV. Spencer Israel, Steve Strazza, JC Parets will join us as well. He's somewhere off in Toronto right now. Man, good to be back. Missed you guys. I should go away more often. I should go out of town more often because the market clearly likes when I do that. At least it did this time around. So, yeah, I have a lot to catch up on. I need Steve to catch me up to speed on market moves. I was keeping up with the news flow the past few days. A lot of newsy things happening that we'll discuss probably. Let's see what else we got. Tyler Wood is the guest today. He is the head of the CMT Association, so we'll find out more about the next symposium and all that good stuff from Tyler and 9. And what up, chat? We'll see where the show takes us. How about that? Loosey goosey today. First day back. Trying to remember how things go. So let's do it. Yo.
Hello.
It's the Strazza show. What's going on?
How was Disney?
Disney was good. Disney was I was in LA, man. I'd never been to LA before, and my objective was to basically see it all, so I don't need to go back. And mission pretty accomplished. I don't really think there's much that I missed. I'm sure there is, but I don't know what it is.
You went to Hollywood?
Actually, no, we did not go to like the Walk of Fame. That's like everyone says don't go there, so we actually did not go there. But
stars on the walkway. Is that what that is?
Yeah, did not go there. I guess we could have. We had the time, but Disney drove around Beverly Hills, Rodeo Drive, the whole thing.
Oh,
Sunset Boulevard, Sunset Strip, Santa Monica, Ocean Avenue, which is the lovely downtown there, right on the beach. Saw the Hollywood sign. Attempted to go to the famous Griffith Observatory, but too crowded, not enough parking, had to bail. But a good trip, man. And then before LA, I was in San Diego for a couple of days, and I'd been to San Diego before, right? And you have too, but I'd only ever been downtown. Mm-hmm. And this time I actually went to different parts of San Diego, and I will say the vibes in San Diego, like not the downtown part, but like the actual residential parts, the vibes were like immaculate. And I don't know if it was because it was like a Saturday morning and I was like on the beach, or if that's just how people always are, but like they're so happy to be there, and the weather is so nice and they're so friendly.
Yeah.
And like people like yield to you when you're crossing the street, like it's crazy.
Yeah, getting out of the tri-state sometimes will surprise you. I had cousins who lived in, I guess, Rancho Bernardo, which is a suburb of San Diego, from what I understand. So I used to go visit them like in the summertime when I was a kid growing up. Loved it out there. And the weather's perfect.
Yeah. We were walking on the boardwalk and I made a comment to no one in particular. My friend who lives there, I said, imagine living here. And a woman who was walking next to us turned around and was like, I know, I live here. It's amazing.
All right. Hit the state of the markets. I got a coffee delivery, and then we'll get into it.
All right. Oh, we got JC here. JC in Toronto. Yo, JC.
All right. What's up? What's up?
What's going on?
Oh, hey, buddy.
Oh, just hanging out in Canada. I love Canada. What a great town.
Why do you love it? Tell us why you love it.
Because
Canada, not a town, actually a country.
No, Canada's a whole country. I do love the whole country, but I like Toronto. Toronto's like Philly. It's like Philly, but cleaner.
That's your compliment for Toronto. It's like Philly.
I don't know.
Yeah, it's more like Philly than New York, even though like the mindset is more New York than Philly. But I like, man, Vietnamese food, Korean food, Indian food. Like, that's how I like to roll. Japanese last night.
I heard about this.
I got Dutch and Italians where I live, so I don't get much of this where I live unless I'm in New York. So anyway, yeah, it's fantastic. A lot of ADRs in the wild. Bank of Montreal. Toronto Dominion, Bank of Nova Scotia. You know,
Yeah.
just ATR, everywhere, Canadian Pacific, like everywhere I go, it's like, oh, there's another one.
Seeing stocks in the wild is fun, but seeing ADRs when you're outside of the
More
US
fun.
is a blast.
More fun.
To me, I think it's fun. You know, I think it's fun. I really enjoy it. So, you know, listen, quick, I'll let you guys get back to the show. But for me, you know, this volatility index, holy shit, dude. I mean, I'm no like VIX expert, and I certainly don't want to overthink the VIX. I feel like I've talked more about the VIX in the last 2 weeks than I have my entire life. But man, that collapsed very quickly. Like, wow, right? I mean, of all the things happening in the market, like that to me, that's got to be up there on the things that stand out the most to me. No, am I overthinking it?
But JC, like, you know, just like a lot of progress was given back, and now like damage is being repaired. Like, I look for it to come all the way back to where it was. The VIX was at 12 in July before things got a little dicey out here. We're at 15.5 today.
Yeah.
Why shouldn't it have been more? Is what I'm saying.
Well, think about our sentiment composite. What's in that sentiment composite? The VIX, put call ratios. You know, the VIX was a 10. Put call ratios were muted as hell. You know, the newsletter writers were the most bullish in 3 years. That's in there. The individual investors were pretty high also. And then you've seen the biggest drop off in bulls, in newsletter writers, week over week, going back 4 years. You've got the biggest spike in bears and individual investors going back over 2 years. So like our sentiment composite, like there's a reason why those things are in that composite. And look what each of those things are doing. You know how like we take away to the evidence and look at the Dow components or look at all the sectors in the S&P? It's kind of like that for our sentiment composite, right? Go one by one. You know, a lot of those have had massive moves, you know. And these longer term trends remain in place in the equities market. So anyway, that's what's on my mind. How am I doing?
Did you want to weigh in on the job report before you went?
Yeah, you know, I'd say the job report today was strong to quite strong.
Pretty good.
Yeah, I mean, it definitely exceeded expectations. I was losing sleep over that. The truth is, I didn't even know there was a job report until you just told me right now. So,
Well,
I hope it was as good for you as it was for me. So.
I think it's good. It looks good. It looks so far so good.
It was jobless claims. Jobless claims comes out every single Thursday. So
retail sales.
All right.
Little Philly Fed.
You learn something new every day. All right, guys, listen. I got to get back. I got to get a coffee at Tim Hortons. They call it Timmy's around here. By the way, just so you know, on the locals lingo, it's called Timmy's. No big deal.
Timmy's or Timmy Hose.
Have a Boston cream donut. Have two. One for me. One for Spencer.
I don't feel comfortable calling it Timmy Hose. I'm gonna go with Timmy's. I'm just gonna stick with that. That's gonna be my move. You know. All right, guys, enjoy. I'll see you.
And he's gone. I think he's out of here. All right,
quick one.
That was fun. All right, so back to state of the markets. I wouldn't mind a little catch up myself, to be honest. I was keeping up with major indexes, S&P, NASDAQ, so I know what's happened in the last week. But aside from the volatility collapse, fill me in on sort of what's going on.
Came into the week, and the rally attempt off the lows from last week was still looking kind of lackluster. You know, things like hadn't even retraced 38%, the first Fibonacci retracement in the major averages, still well below VWAP, potential VWAP resistance from the pivot highs, stuff like that. You want to see rally attempts kind of get back to these little natural levels.
And is that happening?
Then Tuesday and Wednesday were a lot better, right? We had a big move Tuesday, some follow through Wednesday. Looks like we're going to be green here again today. So that rollover alert, right? That I was kind of talking about last week. It looks a little bit better here now. I think maybe we could be in the all clear. But let's see how this holds. Let's see if and when bears come out and then what they got when they do, right? We haven't seen it yet. We haven't seen the bears kind of take another attempt to try and send prices back to the pivot lows from last week. So for now, it looks pretty good. Here you go. Logical levels, right? NASDAQ 100, You want to see the rally attempt at least get to test the VWAP. You really want to see it to and through the VWAP before you have any confidence that buyers are back in control of the short-term trend. We're close to that in something like the NASDAQ. Tested it yesterday. If you look at semiconductors, they have a little bit more work to do, right? The selling pressure was really focused in big cap tech. And if you had to pick one industry group that got hit the hardest, it was the semi. So here you can see it catching a little bit of tradable low at a logical support zone at the pivot lows from earlier in the year, bouncing off that level. Also the VWAP support there from the October lows from last year, big level, right? So logical level. Now we're kind of trapped in between these two VWAPs, right? In between the support zone and then the resistance zone that's coming overhead at the VWAP from the July highs. Let's see bulls kind of reclaim those VWAP levels, get back in control of the tactical or the short-term trend. That would be a monster development. That doesn't mean we go on to make new cycle highs immediately, but it means the bulls are back in control, right? I'm more comfortable putting on risk or putting on more long exposure if we're back above the pivot high VWAP in the major averages. So it looks like we're close in the NASDAQ and the semis. I want to focus there more than something like the S&P 500, which, you know, if you're listening at home and doing the same thing, S&P 500 already back above VWAP from pivot highs. But we got to see the NASDAQ do the same because that was really, I would say, the index culprit, right, where most of the selling was concentrated, big cap tech. So you want to see that damage repaired in the NASDAQ first and foremost. And then you got something like, yeah, and here you can see getting to and through the 38%. That chart is a day stale. So yesterday we did test the VWAP. If we're green again today, we'll be through it. 473 is the 62%. Then you got to start talking about, you know, an eventual retest of the pivot high. So this is kind of like step one, check. And now let's see what's next. Then before we move on, Fonz, I want to show the small caps, right? Because this is really the big one. Russell 2000 seems to be holding 200 for now. Yeah, right. Just absolutely rejected. Looked like we got a sweet breakout, high and tight coil where you have the oops drawn slammed back into the, you know, year-to-date range, and then a hard retest of the base breakout level at 200. For this, it's like we're above 200, fine. We really want new cycle highs back above 225. That tells you, you know, small caps are starting to participate again, starting to trend higher. But if we're below 200, I think we need to rethink how aggressively long equities we want to be.
But my biggest takeaway from I guess that volatility spike and then your guys' reaction to it was that just because we've gone up, what, 1, 2, 3, 4, 5 days in a row, I guess, and we've bounced hard off that low, you guys are still waiting for the confirmation, right? You're not, and this jives with like sort of the rest of your analysis, and you're not especially interested in like nailing tops or bottoms. It doesn't really interest you. What you're more interested in, like you said, is waiting for the bulls to reclaim control. And once you get that, that's your all clear. We haven't gotten that yet, is what you're saying.
Yeah, absolutely. Like think of it as step one. Right. Step one in the right direction. If you talk to me on Friday, I'd be like, we're probably going to retest the lows. This doesn't look so good, right? I thought it was a really lazy bounce attempt. The first half of this week was far better. More and more things were participating. The speculative stuff was starting to work again. Even like the financials kind of woke up, looked a little bit better, I guess. I want to see more from commodity stocks. I want to see more from industrials, right? So there are still things, but at least when you look at the major averages and you look at most stocks, right? NASDAQ 100, the large cap tech stocks that most people own, that one looks like it's well on its way. You want to see the 38 retrace. You really want to see us back above the AVWAP from the pivot highs. And like I said, the S&P 500 got it done yesterday. So look for the NASDAQ to get it done into the end of this week. I think that's a huge step in the right direction. And then I think we could be more comfortable putting on more risk.
Good. We've come a long way in a week.
Yeah. It's been good so far this week. Look, if the bears come out today, Spencer, and the indexes are down, 1 to 2%, and it's like, oh, back to last week.
That would just reinforce what you just said, is that we're in no man's land.
It could be messy. So yeah, look for a battle to kind of happen here in between these two VWAP levels, I think. I think, look, this market sideways makes a lot of sense right now. Sideways, messy makes sense to me. That doesn't mean it has to happen, but that's kind of where I'm leaning. That's what I'm trying to anticipate.
Cool. All right. I feel like that's a pretty good I mean, I wasn't here the past few days, but it seems like a pretty good sense of where we're at right now.
You
Do
know
you
what's
want to talk?
Yeah, you know what's got to get it together? The Bitcoin and friends. I mean, these cryptos,
Yeah.
they gotta do better. You want to see these speculative assets start working. That might be the most positive development you could see for stocks. I say Bitcoin just ripped higher, took out this range, started trading back into the mid 70s. That would be huge. Then I'd be looking at the stock market like, okay, let's go. Aren't you going to follow? But we're not seeing that. Stuff like oil can't get
Yeah.
off the ground. Energy can't participate.
I
But
mean,
all of the alarming stuff from 2 weeks ago, credit spreads blowing out, that they've really receded, right? They've come back. The intermarket picture looks far better. The volatility in Forex market seems to have stopped for now. Also, the volatility in the bond market, right? Not just the volatility in the stock market. So we could check a lot of boxes in terms of like elevated risk environment that we thought we were in 2 weeks ago. That is kind of abated for now.
you can check some, not all of the boxes, right?
A lot.
Yeah. Yeah. All right. We'll have Kenny Glick, bring him on in a minute. Before we do that, you want to talk about some newsy things? You want to start with like
Yeah, I would
Walmart?
love to.
Let's-
Walmart. Hey, can we talk about the Starbucks Chipotle thing yesterday?
Yes, I'm amazed. I'm so sad you guys didn't talk about it.
Yeah, I missed it. I didn't even see it until after the show.
Oh man, yeah.
The Chipotle CEO, who has done just a masterful job, if he's been CEO there for long at all, right? Brian Nickel, what's his name?
Yeah, it's been there for like 5 years,
So
8 years.
that company is just a smooth operator, probably the best run fast food company in the world, right? That's why the chart looks the way it does. Now he's ditching this, which seems like a fantastic place to be. Like he's done a remarkable job. Everything's going great for Starbucks, which is literally like burning right now. It's like disaster zone. They just got a new CEO. This is after Howard Schultz had to come back for like emergency save the company mode. Then they
Yeah.
got a new CEO that lasted what, a year, not even. So now they're out. Now they got a new guy coming in. This is why. If I'm the Chipotle CEO, why am I doing this to myself? He must.
He got a nice hefty payday to do so. Right? But my first thought was, gosh, how often do you see this? How often is like the CEO of one company straight up poached to not a rival per se, because Starbucks and Chipotle, yeah, they're not rivals, but they're in the same business, right?
Yeah.
Yeah, just super interesting. The Wall Street Journal had as they do had a pretty good behind the scenes play by play of sort of how this all played out. I guess the CEO of Starbucks found out on Sunday that he was getting the boot, emergency board meeting, the whole thing.
Wow.
What this reinforced to me was another win for Elliott, right? Isn't Elliott involved in Starbucks here? And those guys just seem to always kind of get their way or increase value somehow, right? But the jokes that were happening all over Twitter, I'm sure everyone saw them, was Chipotle, obviously, bit of a reputation right now for they were always known for their generous portions, and that's kind of come down to earth a little bit. So people were joking about, prepare for more ice in your cup, prepare for a few less coffee in your cup. Regardless, I've always thought Starbucks should be doing better, right? I've owned the stock on several occasions. I don't own it now, but it always seemed, because anecdotally, whenever I'm there, it's freaking crowded. So I don't know, but like you said,
hold on. You're right about Elliott though, but there's some interesting stuff going on with the hedge funds here. Did you hear about Nelson Peltz and Tryon?
As it relates to Starbucks? No.
Yes, no. It happened really fast. So basically, they got involved. They didn't even have time to take a board seat. They built a large position. This was reported 2 days ago. They had built a substantial stake in Starbucks over the past few months.
Oh, and they sold it?
Tryon reportedly sells Starbucks stake, is satisfied with today's outcome. So they literally came in and forced the CEO out, got us pop in the stock and sold into it. Which is fine, which is totally fine. That's activism, right? But that's bad. That's hardcore.
I don't know if they forced. I don't know if they had a hand in it. I don't think they did. I think this was like all from the board. I don't know if any like activist hedge funds actually had a hand in this happening. But
so Jeff Mackey, who I think has been on our show before,
Yeah.
was on CNBC yesterday talking about it, and he said, "You're right, Spencer. We don't know anything. One could surmise." This is Jeff Mackey's take. Trian's turnaround plan for Starbucks was fire the CEO and hire a better one. They dumped their entire stake this morning. And then that's some good activism. Look, crazier things have happened. Sure, they didn't have a seat on the board, but who knows how large their stake was. Maybe they got what they wanted faster than they thought they would.
I think what's most interesting is that, like, in the world of CEOs, the talent pool is relatively thin, right? There's only so many to go around that seem to be good at their jobs. Yeah, so
get this. Starbucks was up like 20%
It was best day ever, right?
Best day in history.
Yeah.
That's wild.
Yeah.
The CEO, hey, big expectations to live up to now after that kind of a move.
Yeah.
Logical sports zone though. I mean, note the chart, throw up the chart real quick, wrap up this conversation. Sometimes you just identify key levels of interest on charts where you might have a good risk reward equation. You lean into them. You would have got real lucky if you bought this support zone in Starbucks. Just throw up the chart quick, Fonz, before we move on.
Why don't they have like a good membership, like subscription service? Starbucks, maybe they do. I don't know about it, but
they're not growing it. I heard it's they have one, but it's not growing, and it might have something to do with the fact that like you can't just get like a drip coffee for a couple dollars there. It's like you got to spend like $8 or nothing. Why don't they have some sort of low cost option?
Why don't they have like pay $5 a month to get I don't know unlimited coffee? I don't know.
I'm not honestly. I would never be interested in a Starbucks membership, but like I wish I could walk in there and get just a strong cup of coffee for like $2.50.
Yeah,
I don't think that's the business.
I don't know.
Ian,
crazy. All right, weird stuff. Let's put on Kenny Glick. See what he's watching today. Kenny.
It's been a long time coming. They ain't come from my club, they took it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Yo,
my man, what's up?
What's going on?
I come in briefly to hear what you guys are rapping about, and I'll do a brief commentary on that. What are you guys talking about? The bull market kind of never went away. That was an attack, a pre-planned attack on complacency.
Okay.
It was Volmageddon, right? So
part two, part three.
If you guys are, again, maybe I'm talking just to investors, and that was a moment where now you're going to debate whether or not that was what was that? Is that the impending doom of a recession coming or long-term blah, blah, blah? If you live in the moment like we do, day traders, right? These were the greatest days and continue to be the greatest days to trade in the history of trading. So they wiped out the complacency. They wiped out people that were short vol. Boom. Okay, it's over. So when the QQQ hit 420 on the nose and it held, there's your bottom. So you could start building from there. So if you've been debating whether or not to get back into this market for some miracle moment where, it's got to do this or it's got to do that, it's doing it. It's doing it. The vol is crashed. That's giving you the all clear signal to buy. And what do you buy? Go right back to the QQQ. We got a 50-point bounce. So if you're waiting out there, ladies and gentlemen, for us to break new all-time highs for you to feel comfortable to get back into the market, you're doing this all wrong. That was the dip that wiped out the first dip buyers, the second dip buyers, and then the third dip buyers who had a little bit more patience. Wealth transfer, thank you very much. And here we go. I don't think we're ever going to have a down day ever again. I'm sure we will. September and October are coming. But if you're waiting for one of these like moments, like, do you need the skies to open up and say, now is a good time to buy? Look at what we're seeing now.
It wouldn't hurt. It wouldn't hurt.
People's heads off right now.
It wouldn't hurt. No, but it's important that you're talking about it from a shorter term perspective.
Absolutely.
Right. That's important.
But in this short term moment, You got a 45-point bounce on the QQQ. You just watched the UVXY fall from 65 to 23 with not even a green tick. So these are days to be getting. I don't say you're going to get rich as a day trader, but this is it.
Yeah.
These are the glory days. These are the days you want to be involved. So if you're sitting on the sidelines and you're confused right now, join me. We are thriving in this market. Other than the fact that I got my ass kicked from UVXY because I was already short when that attack happened. I was victimized by it, but you get right back in the saddle. And these are the greatest trades. These have been the 3 or 4 greatest days of the last 2 years, other than that May 31st massive reversal. These are awesome, awesome day trading days. And if you guys are not involved, join me. Come see what this is all about. These VWAP reversals, we haven't had a loss. So if you stay focused on what's happening intraday and trade around the VWAP and trade around these earnings reports, it is phenomenal. Like this ASTS, you don't even know this. The market even had a blip down. This stock is so awesome.
I look at this one and I would probably once a day. Seems like
it's absolutely phenomenal. I mean, I'm trading stocks that let's say 3 weeks ago, or maybe 5 weeks ago, I could have said, they're pump and dumps. But when the pump and dumps sustain the rally and
they don't dump
back and get bought, they're no longer pump and dumps. Like Serve, come on, it's a robot company that probably never will make money ever, but who cares, because the stock's in play every day. So, each day we go back to, we go to the earnings reports, and you got these stocks, they're just handing you the money, the Qs, the UVXY short, the earnings reports, and some of these stocks that just don't want to go away. And if you stay focused, these are the greatest trading days I've ever seen, literally.
The theory I've been thinking about in my head is like, what if that Volmageddon that we got a couple weeks back, in the past, that would have been like a week-long or several week-long event. But now, because things are so much faster, it was basically just like a day and a half, right? Actually, not even.
Right.
So just maybe more frequent but shorter duration events like we just got, right? I don't know how
I hope it happens again.
I'm sure
I hope it happens again.
that'd be great for you, right?
Right, because next time I'll borrow money from the bank and I'll go out in the street and rob old folks to put into the UVXY short.
Great. Not investment advice. Kenny, what's on your watch list today besides the delivery, the robot delivery thing?
I'm looking at Walmart. I know you guys mentioned it. So big gap up. I'm going to wait to see if it holds. So far it has. So far it's hanging in there. So again, this is an easy one. So Tim, I'll show you the daily chart. This is right now. So look, it's been trending up. You had the one attack, boom, you got bought, just like everything else right now. So if there's going to be any selling, it's going to have to break down under that prior high. So I'm looking for a short. Again, I play reversion trades. And again, it's very difficult to short a market that really doesn't want to go down anymore. But I will. So I sit here and I stalk it. 74.50, you break the 74.50 again, you're probably going 75. But if it rolls over, that 74 breaks, you get that reversion down to the VWAP, and that's your day's pay. And if the VWAP doesn't hold, then you look to go back to 72.50. So as much as this market refuses to go down right now and the bulls are in control, the bears are getting annihilated, I still look at Walmart as a possible fade. And again, on the other side, look at Alibaba. Again, not a fan, but you're a fan right now. So here's the stock. Got slammed on the earnings. There's the attempt to break VWAP. There's the attempt to break VWAP. There's the break of VWAP. Buy it. So right now, you're a buyer. Again, you were a buyer. You're already getting paid about $1. So now if this thing gets over 78.50, you're looking for it to revert back to prior day VWAP is around 79. So I'm definitely looking at Walmart, Alibaba. And of course, I'm just going to keep trading these QQQ daily options, but there's not much to do after they've already ripped 5 points in the pre-market. So, again, ASTS, Serve, Walmart, Alibaba, and also the same stocks I've been trading. And again, listen, I know you want to hear different names, and you just look at the earnings list. You got JD today. It's a couple of other ones, another Chinese stock. But when you really get down to it, as a day trader, when you have a trade that works and a stock that cooperates, do that. Again, do what works and do that every day, and you'll be successful. And that's what it really comes down to. So join me in the room. Watch me live. I'm rip-roaring till noon every day. And then we have a couple of guests that come on, and it's just a lot of fun when you know what you're doing, and you could enjoy these momentary monster volatile days. Don't be afraid of volatility. It's your best friend.
All right. The link to get Kenny's room is in the chat. Hit thebid.com. It's also on the screen. Check it out. Like Kenny said, the great thing about day trading is that there's always day trades to make, right?
Oh, yeah.
Like any given day.
Right.
So both sides of the market.
But if you're thinking again, I like the idea like, oh, for this market to show, it's real strength, it's got to test that low. While people are waiting for that, we go up. Again, as a bear, I've been so victimized by these moves. The bears, and again, I speak for me and my brethren, we wait for this other shoe to drop. Oh my God, what was that all about? Oh my God, I can't get involved in this market until I see some real clarity. That clarity never comes. That magic moment never comes. You just got to get in. And this market is just so resilient. And listen, if it does come, watch UVXY. If it ever starts to show strength, you'll know that there's something on the horizon because it showed some real strength Thursday and Friday before the disaster. All right, my friends, you got it all set. Come see us live.
That's it. See you, Kenny. All right. Do we have those earnings charts, Fonz? Can we bring up the Walmart now? Just stocks up what? 8.5% this morning. Earnings were good. They raised their guidance. Don't tell me the consumer not strong when Walmart's raising guidance. They call it a bellwether, right? So yeah, guidance raised, earnings beat 8.5%.
That was a strong report for the U.S. consumer.
Yeah, no doubt. I mean, the Q3 outlook, which is the outlook for the current quarter, was okay. It was okay. It wasn't great, but for the year, they're saying, yeah, we're still Walmart. We're still the number one retailer in the country.
So have you ever heard the argument? Well, yeah, Walmart sales go up while the others go down. When the economy is actually weak, people shop at Walmart more. I
have heard that.
Walmart for its lower. That's a trash argument. That is like the coldest take I've ever heard. Who starts going to Walmart all of a sudden instead of like their other grocery store because the economy's bad? You either shop at Walmart or you don't, right?
That's kind of how I feel. Yeah, exactly right. How many people go from Trader Joe's to Walmart? Not many, right?
I hate that, but it's a popular argument. You'll hear it. Trust me.
I know.
They're saying it right now on the news.
I know. In reality, what it means, I think, is the people that already shop there
saying it right now
are just spending more money there. Right?
Yeah. So, Josh, we're talking about you. We're talking about you, man.
I think that the argument that you're saying, Steve, that does apply maybe to Dollar General, Dollar Tree, but not so much to
Does
Walmart.
Steve feel attacked by Kenny's commentary this morning? I'm going to tell you a secret about Kenny's commentary this morning. I am glad Kenny stayed on longer than usual because it gave me time to pound a breakfast burrito and a half from Sonic while you guys were talking. So I have no idea what Kenny's commentary was. I was knees deep in a breakfast burrito.
He was inhaling a burrito.
The review, positive. The little toaster sandwich, though, crap, garbage. Don't get that. Go with the breakfast burrito. The breakfast burrito,
all right.
Me too. So I don't know.
All right. Hey, let's bring on Tyler Wood, shall we?
Oof.
Let's do that.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
What's up, gentlemen?
Tyler Wood, y'all. What's up, Josh?
You're making me hungry, Strazza. Breakfast burritos, I have like a weak spot. I'm not an addict, except maybe to coffee, but man, breakfast burritos, that would probably be the closest thing.
Get involved. I've never tried this before, but it was Yeah.
You know, I live in the middle of nowhere now, so there's no Sonic, there's no Trader Joe's, there's no breakfast burritos. I got to make them myself. But
Do you live in one of these locations where like you pull up Uber Eats and there's just nothing there? There's like a
we
McDonald's
don't
now.
have Uber up here. There's
No,
no
don't even
Uber.
have Uber.
No, I can't even get a ride.
Amazing. That's so good. So
I'm kidding. But yeah, a lot of fresh produce. We get most of our things from the farmers market, which happens today. It's on Thursdays, and there is a John's fish truck. He gets fresh seafood flown in from Boston, and then drives from little township to township. And
Wow.
I got crab cakes and salmon coming my way for dinner tonight. I'm not too upset about it.
All right.
I'll bet the crab cakes are from Maryland, right?
I bet you're right. But they're gluten free. You know, it's like all crab meat and nothing else. It's just great.
Okay.
No travel for you lately?
You know, it's been an exciting period for CMT Association. I was gone. My wife will tell you every single week from September through April, and that was exhausting. But it gave us a platform all around the world for extending education, for advocacy. We're working with regulators all across the globe. We're working with new fintech operators. We've got a partnership with DIFC Academy in Dubai for helping train folks in a responsible, ethical manner on how to use technical analysis. But after that much travel, it's time to, get back to basics. And we did undergo a little change of leadership at CMT Association. My good friend Alvin Kressler, that I've worked with for 8 years, is pursuing new adventures. And I don't know, I guess I was what was left. So
yeah, Tyler, the last time we had you on, you were not the executive director / CEO.
I was not.
But now you are.
And now I am. It's amazing how those things change. All that means is that I'm going to continue doing what I've been doing for a while, and we've got some exciting things in the works for members and charter holders, and also for the candidates. So it's a great honor. I'm going to give it all I got for as long as they'll have me. But yeah, I'm pretty excited about it.
Well, congratulations, Tyler, on the new role. What are some now new CMT priorities that you guys are trying to tackle? Like, talk to us about some of these new and exciting things.
Yeah, I mean, at the annual general meeting at the end of June, we talked about kind of 3 core goals. Number 1 is what we're doing with the CMT program. So this whole year already, we have been hard at work on developing a brand new curriculum for 2025. So for those who are in the CMT Association space, you probably know that the body of knowledge of technical analysis is not one point in time. It's a living document. It changes and expands just as the discipline and the markets change and expand. So we do a practice analysis, go out to all the hiring managers on Wall Street and Bay Street and Dalal Street to make sure that we've got the same knowledge, skills, and abilities being tested in the CMT program that they're looking for when they're hiring their next person on the trade desk, junior portfolio manager, research analyst, you name it.
Well, I love the new curriculum stuff, because as CMTs, like, we are trained to not be dogmatic and to update our views and to change our minds when new data comes in. So I think the curriculum should be updated all the time. I heard Mike Hurley's getting added for breadth. I was so excited. That's
absolutely right. There's a lot of folks contributing to the new curriculum. Our good pal Brian Shannon, right? Volume weighted average price was something the regulators came up with to protect buy-side clients from getting bad fills on their sell-side execution. So they are tracking the volume weighted average price. Well, that's a new tool that technicians can use to understand whether everybody's underwater on their trade and how they might be reacting to the moves of the market. It's amazing to think that after 50 years as an organization, there's still tons of innovation, tons of new change coming out. Did you guys catch the webinar yesterday with Ralph Vince?
I did not. My parents were in town. I will have to check it out. What'd you guys talk about?
I thought you were about to say I didn't, but my parents did. I was like, Strazza.
Yeah, my parents watched it. Yeah,
Mr. and Mrs. Strazza are going to be seeing.
I was away from my desk.
That's awesome. So Ralph Vince and Larry Williams wrote the award-winning paper for the Charles H. Dow Research Competition. And it's all about market breadth, but new ways of using some signals for sequential down days in breadth measures. And Ralph Vince, I think the first time I met him was 15 years ago at a Bloomberg seminar, a CMT chapter meeting hosted by Bloomberg, and he was talking about optimal F. So rewind, 15 years and 60 pounds ago, young Tyler was sitting in the audience watching this guy look at three-dimensional graphs on how to think about position sizing based on volatility.
That's awesome. And did I hear you say consecutive down days?
Yeah.
This is an indicator that does not get used much in the wild. Spencer sees it because we use it all the time here. But just measuring the string of days up or the string of days down either can speak to like a relentless bid for a stock or just some extreme selling pressure. And it's such a simple one. No one pays attention to it. So I'm definitely going to check that webinar out.
Strazza, it's amazing to me that some of those like foundational concepts, Dow theory, or the work that Paul Desmond did at Lowry's for years, breadth thrusts or up days versus down days. Like these things were observable and tracked and used in the 70s and 80s, right? So we're talking about 40 and 50 years ago. And it's amazing when I talk to young people, they're discovering it for the first time. And I think that's a testament to the fact that a lot of this is driven by human behavior. And if we can observe it using these tools, even if they're 50 years old, it still has a lot of information for us. So goal number one, the CMT program, making sure that is the most well-recognized credential in the land and making sure that the level of rigor continues to climb.
Yeah.
The second thing is involving more young people in the organization. Not that we don't have a ton of young people in the CMT program. We've got over 10,000 candidates across 140 countries, more than 140 countries in the world. And a lot of them trend younger than what we saw in years past. But they're not committee leaders. They're not volunteering with their local chapters. They're, we don't know their faces and names. We got to have more opportunities for them to share their work, some market opinions, maybe have it critiqued by some of the old guard, and do more of that young person-led initiatives.
Do you guys show up ever at like undergraduate career fairs or something like that? Because at least for me, I had no idea that the CMT even existed or what it was until I was a couple years in career.
Yeah, and poor thing, you became an auditor.
I know, right? I had no idea that this world existed. Like no one told me about it until it was too late.
Can you explain, Spencer, why Strazza still has hair? Like I just don't know. How is that possible?
I got a situation over here, so I stand like this.
My only idea, Tyler, is that he lives in Key West, so there's something about being in the Keys.
That might be it. Lots of fresh fish.
Yeah, I don't know.
I got a lot of sun.
So your question was, do we show up at undergraduate?
Yeah.
And, the pilot project that we started a few years ago with our academic partner program has blown up.
That's awesome.
My good pals, Joel Panicott and Kazan Marolia, both ex-Bloomberg, and worked phenomenally well with their education division. We've expanded to over 70 schools around the world where professors are teaching technical analysis, where the CMT Level 1 textbook is the subject matter for their courses. We also launched an investment challenge, so like an online portfolio management competition.
That's
twice a year. And there are thousands of young undergrads participating in that as part of their preparation for their student managed fund. So little known fact, a lot of these business schools take a small portion of their endowment and they have a class, typically seniors or second year MBAs, who run the portfolio. And get this, I was at their conference in Florida this May. I can't remember when that was, April or May. And these kids have outperformed the consultants, the investment consultants that are running the school's endowment. They're getting better returns at lower drawdowns because they're so sharp. They're so smart.
We just hired a new intern. Shout out Ricardo, and he was working on the investment committee, managing real college, a piece of the college endowment where he was. I wonder if he was CMT involved because he's already signed up for his first test now. So
quite possible. I should meet Ricardo. Tell him to give me a shout.
Yeah, you will. He's moving to New York City soon. So
Oh, fantastic.
yeah. We'll all be in touch. That's so good to hear. I love the college stuff. Start them young. Like I said, I wish there was like a technicians club or anything offered by my business school. It was nothing. It was like Black Scholes or see you later.
You know, I had a similar experience in my MBA program, and I don't fault them. Understanding financial statement analysis, understanding valuation. That's since the Securities and Exchange Commission wrote their famous piece in the 30s that everything needed to be based on sound fundamental principles. It maybe a little reactionary after the crash of '29, but the concepts behind that are great. Now, if you blend that with the market's understanding of all of those valuation metrics, then you've got a seriously sweet spot as investors. I think we should be using all of the tools at our disposal. So using fundamental data, not fundamental opinions, can be really, really helpful.
I couldn't agree more. Well, I am such a big believer in fusion analysis. I think it's too common for investment professionals, market participants to choose one or the other. Like we're like enemies or something. Like, oh, I'm a technical guy. I'm a fundamental guy. You could be both. You could be both, and you'll be so much better off for it. Even if you don't plan to leverage what you learn about fundamental analysis in your work, right, or in your trading or investing, knowing what other people are talking about, because they're all talking about fundamental stuff, and being able to speak and understand that language, it will make you so much better off, because you can understand maybe the risks that people are chirping about and understand that it's noise and that it shouldn't be listened to. So just having that body of knowledge, even if you don't think you're going to use it, I think can give you an incredible edge in the market.
How about the fact that we came out of that rip roaring bull market in 21 and 2022 we saw interest rates spike. And all of a sudden those tech darlings and the like very speculative, cryptos and all of the alternative investment space suddenly lost, investors lost interest. Well, understanding that long dated valuations, things that are more speculative, that rely on a great liquidity environment to actually achieve those kinds of maneuvers, like understanding that fundamental investors are less interested in speculative tech in a rising interest rate environment, that's very helpful. Like you can see it coming, and I'm a human being. I fall victim to the fact that I like to know the story. Obviously, you trust your chart first, and that's how you manage risk and capture reward. But it's also nice to know why, right?
We'll come on here and laugh about DCF analysis, but it's important to understand DCF analysis, and those cash flows are worth less when interest rates are higher, right? So that kind of stuff, you can put the puzzle together easier when you have a wider body of knowledge, and it's important to know both. So I love to hear that. And it's also just a refreshing position that the CMT is taking more broadly, that fundamentals are not the enemy, right? Like you do these things are complementary. It's lovely. We could all get along. Kumbaya.
Yeah. When I first joined the organization, I met some of what were then old timers. That was 15 years ago. Some of them were pretty dogmatic about their technical tools, and that comes from a landscape on Wall Street where the sell side research analysts who are issuing fundamental opinions hated if the technical research group disagreed. Yeah, that's right. Sometimes we're going to disagree, right? And like there's a important signal in that as well. If the market is tanking, even though your fundamental view hasn't changed, like maybe go back, sharpen the pencil, maybe do some forensic accounting, see if there's some shenanigans going on with the CFO. I don't know. But I think that competitive landscape on Wall Street created a little more, and of course, fueled by financial media. They love pitting one against the other. I've definitely seen that go away. The best investors out there use every tool at their disposal. Absolutely. And there's not a single fundamental PM that I've met who doesn't check the chart before placing the trade. Right.
I think the internet has helped a lot with that too. Over the years, right? Yeah. Like it's just easier to learn both sides. There's so much awesome free information.
Yeah.
Shout out. We have a CMT in the chat. Paul Wankmuller says Tyler is such a great steward.
Paul. I owe Paul a text for a Boca meetup, and the answer is absolutely yes, buddy. I'll call you after the show.
What, can I come?
That.
Yeah, of course. We gotta have you there.
Wait, Tyler, before I let you go, I was asked to ask you what's the skinny on the next symposium?
The skinny on events.
Give us the deets.
The deets. So we're going to run 3 conferences in 2025. The first one is going to be in Tampa, Florida. We're bringing back that midwinter retreat. It was a wonderful tradition leading right up into 2008, and then something happened. Look at that.
I endorse the Tampa.
So we're back to Florida, January 16th and 17th. Ran a story about it in Technically Speaking last month. There's save the dates in the August issue of Technically Speaking. That's the CMT Association magazine. So midwinter retreat, mid-January, 16th and 17th. Then in April, we're going West Coast for another conference in San Francisco. I think we're buying the bottom, guys. I think we might be finding an upturn based on intel from those who live in San Francisco. Wow. It's not nearly as bad as media would have you believe. And so by April, we're going to go out there. We're going to talk some charts and then do a little wine tour up in Sonoma. I know you guys are going to be there.
That's great.
And then October, big symposium back in Dubai. So for anybody who missed the 2024 event in Dubai, it's back on the schedule. We'll be there in October, which is a lovely time in Dubai. Oh my gosh. The weather is perfect. Every restaurant is on a roof or an open air. It's great. And some of the brand new experts that we haven't had in the US, it's a long way to travel. You'll be hearing from a lot of really excellent money managers in Dubai.
I had some serious FOMO last year, so I'm so glad to hear I'll have another shot.
Absolutely. And I think we're gonna keep going back there. We're building quite a bit in that region, and lovely people. It's really I can't encourage you all enough to carve out that time and make the trip over. Yeah.
Well, this is exciting. I'll definitely see you at 2 of those 3 conferences.
Awesome.
And San Francisco, I'm with you. I've been out there for some of the TSAA stuff over the past few years. It's fine. It's lovely. I love San Francisco. We were just there a couple months ago.
Exactly. I think San Francisco gets a bad rap.
Yeah.
And yes, they overbuilt downtown in the tech frenzy, but that space will get used. Gaps get filled, Strazza. Gaps get filled.
Yeah. That's great. That's great.
All right. Tyler Wood is the executive director and the CEO of the CMT Association, cmtassociation.org. Check it out. Tyler, thank you so much. Always a pleasure.
Awesome to see you, boys. You be good. Trade him well.
See ya.
Yeah.
Bye, Tyler.
All right.
Always a pleasure. I mean, he's just the best. I think, I was asking about the travel. I think JC's not here to argue with me, but I think he's the most well-traveled man that we know. I really do. I mean,
if he's gone every weekend from what do you say, September to April? I don't know what he said. No, I don't know.
Yeah.
It's a lot of travel, man.
The man gets around. Him. All of them over there. Joel too. They all travel so much. It's so cool. So yeah. What?
Let's go through some stocks here.
Okay.
We got a lot going on. We talked about Walmart, which is up a lot. Let's talk about we might as well just rip through the earnings. So do we have the Baba chart going around somewhere? I think we do.
Also, just like a general
JD.
PSA, if you're not enjoying the conversations or discussions that we're having, no one is forcing you to watch the show. Like this is this is a choice. It's your choice, not mine. So
everything is a choice. All right, yeah. Maybe start with the calendar funds. Let's bring the calendar up. This is kind of the last hurrah for the Q2 earnings season here. With Walmart.
I'm
Baba,
good with it. Like I'm over earnings. So do I understand this right? We just got to get through Nvidia. Oh, I'm interested.
Yeah, but Nvidia is always off cycle forever. So it's in like 2 weeks, I think.
How did Baba do? Oh shit. What up? China is just. Can you read us the Baba print? Sorry.
I'll read you the Baba. The earnings per share $2.26 versus a $2.13 estimate. Sales a little bit light, $33.47 billion versus a $34.8 billion estimate. Cloud though still growing. Cloud revenue up 6% year over year. That's their biggest growth. Oh no, their biggest growth was actually digital commerce, up 32% year over year, and that's their largest segment. Wow, didn't realize that. I thought cloud had surpassed it. I guess not. And yeah, so that's Baba and JD. I think it's the same story. It was a beat on the top line. Sorry, a miss on the top line, a beat on the bottom line, and I think that's all I see for JD. I don't even know what JD is. JD is it down today? No. JD's up. No, they're both up. They're both up.
JD's up slightly. I see Baba is down. Not up.
Baba. Oh shit, you're right. Baba's down like 2%. It was up. I thought it was up.
So listen, this is one of those interesting.
No, well, it wasn't.
This is one of those interesting reports we've had number of this earnings season. This is going to open with a relatively muted reaction. It's not really, the chart is completely unaffected, even the tactical trend, right? So when that happens, volatility crushes, you get cheap calls. I've been looking at this one today. I've been slowly building a position in Baba. This is not a bad report. I understand they did miss on the top line a little bit, which you never like to see, but it's like a 2% miss on revenue. They came in really strong on EPS, which, you kind of got to go read the report to understand why. But this is a fine report, and this chart is continuing to look better and better and better, and starting to show some evidence of a trend reversal starting to shape up. And this name is huge for China, right? This name is really big. So I think maybe you get a little rally on a mixed report here for the rest of this week. And Baba, that would be a big development for all of China. Things slowly looking better out there. China didn't get rocked by the selling pressure the way that tech stocks did.
This is true. Relatively speaking, it did hold up, but it's of course gotten rocked last few years. Okay. That's kind of, I don't know if we have the John Deere chart. Do we have the John Deere chart hanging around? Deere is up this morning, 2%. EPS beat, sales beat, and they raised their they reaffirmed their net income guidance for the year.
Who's this?
This is John Deere. So it's been tough sledding out there.
That chart looks like a short. That's an ugly looking chart.
It's been a rough few years for John Deere, no doubt. This thing went straight up during COVID.
It did
with everything else,
and now it looks like it's like a 4-year, 5-year top in the making.
Yeah,
they got to hold the lower bounds here. They're getting a slight pop on earnings, really nothing special. I wouldn't be excited about this. We always say this one tends to follow Caterpillar. That relationship has really broken down in recent years. Caterpillar looks fantastic. Anyway, I could talk about Hot Corner.
I got a couple more.
Let's go
Ulta Beauty. Let's get the Ulta chart up here, please. The guys over at Berkshire Hathaway, Warren Buffett, or maybe his traders, we don't really know, acquired about 690,000 shares of Ulta Beauty last quarter. This was disclosed in a 13F yesterday. Did they buy these shares in April? Did they buy these shares in June? Not April. Sorry. Did they buy could have been April.
Yeah.
You don't know. But regardless, Ulta's up 15% this morning. New positions are always of note for Berkshire Hathaway. So they had 2 new positions. Ulta Beauty was one. Heiko, HEI was the other.
Yeah, it's aerospace and defense.
Yep.
Like that one.
Yep.
So I guess Uncle Warren not worried about the shrinkage.
I'm not following.
At Ulta.
Oh, we talked about they blamed the but everybody was blaming the shrinkage a few quarters ago, right? But no, seems to.
What do they call it?
Likes it.
What do they call it? Like a snap and grab of something and grab?
I don't. Smash and grab.
So smash and grab.
Yeah.
He's not worried about the smash and grab.
We do know that that Berkshire trimmed their Apple stake. That was not new information. They did a lot of selling last quarter. They trimmed positions in Sirius, in Oxy, in Liberty Media.
Well, it's not new information, but it's also not bullish information if Warren Buffett's selling half of his position. Chevron
got trimmed. Floor & Decor got trimmed. A lot of selling.
BAC, a big
Yeah,
trimmer.
see, we knew about that. Yeah.
Also, we'll just say, and this is so stupid, but this is the market for you. So efficient. Spencer made a great comment that these purchases could have happened as early as April. They were reported yesterday. Ulta is up 12.5% today on this news, and Heiko is gapping to new all-time highs, up 6.5%. If I were Kenny, I would be fading the hell out of these moves.
The thing,
not my game, but
the reason that like stocks will move on a Berkshire Hathaway 13F as opposed to all others is because one, it's Warren Buffett, and two, his reputation. Like we know he's not like day trading this stuff, right? Assuming he's the one that's overseeing the operation. So a Buffett purchase implies at least several years of holding. Is that worth 14% today? Probably not. But that's
were they new positions? Were they both brand new positions?
Yes.
Then I could understand. All right.
Yes.
Fine. Give them a couple percent for that. Great. I think it's rational to think it could come with more buying in the future, right? Stuff like that. Typically, he's not just in and that's it. He's been buying Oxy, it seems like, for as long as we've been doing it corner, right? So, never know. All right. Fun.
All right, what else was in my doc? Kenny mentioned this one already. Serve, SERV, Serve Robotics. They announced a deal with Shake Shack where they're going in Los Angeles. If you order Shake Shack through Uber Eats, this is complicated. If you order Shake Shack through Uber Eats, Serve Robotics will use a robot to deliver your Shake Shack to you.
In a car? In a robot car?
It's not a car. It's like
stop.
It's a robot.
Are they delivering it in a parking lot or to your? It must be like they're bringing it to you in your car in the parking lot, right? Or Elon Musk gonna be pissed.
Hold on.
You get what I'm saying, though.
Yeah, I hear you. No, that's not right. It's like a sidewalk robot thing.
Oh, it's like a robot vending machine?
It's on the sidewalk.
Jesus. All right. Interesting. What a world.
I guess it has wheels, so I guess that makes it a vehicle, right? It moves.
That's great.
It's not a car.
That's great.
Per se.
They're still arguing about Tim Hortons in the chat. Calm down, Canadians.
Dude, I live near one of the only Tim Hortons in New Jersey. And I actually agree. Tim Hortons is not especially good, but that's people love them. Canadians don't know. Okay, I think that was it from my list here. I got the Serve, I got the Ulta, we got the earnings. Missed a couple, but whatever. Do we really care about Dillard's, for example? What else do we have? Why is Paycor? Is that earnings? PYCR? I think that's earnings, right? Yeah, that's earnings up 14%.
No other big reports for the rest of the week either, it seems like.
No, Lumentum up 11% on their earnings report this last night. I think that was pretty much it. Okay, hot corner. Let's see what's going on there. I think it looked thick today. Busy.
Yeah, it's been busy.
A lot going on.
So hot right now.
I want to do yesterday's list also, Fonz. So let me know where we're at. This is today's. The first thing that really stands out, let's get this chart, is Coupang. We have several huge institutions, some that I really respect. Stanley Druckenmiller and Duquesne Capital are involved here. Now we're seeing politicians come out. I think this is the second or third political filing we've seen for it just in recent weeks. Everyone and their mother are filing insider forms and political forms, reporting stakes in Coupang right now. And when you look at the chart, it couldn't be better. Primary trend reversal coming out of this base so nicely. Last week, the price action following earnings, it cut to new multi-month lows, like lowest level since April, and then rocketed to new multi-week highs. It engulfed like its last 10 weeks of trading in 1 week, right? Coming off of earnings, reclaims the VWAP from the IPO day candle all the way on the left-hand side of the chart, and is completing this base. So I don't know if there's a stock that I like to build a new position in more than this one right now. The filings just keep coming. So we had another one today. If you go back to the table, we could talk about it. It was a representative from where about Jonathan Jackson. I don't know where he's from. So Jonathan Jackson reported a buy between 15 and 50,000, which is, pretty standard, maybe even a little bit high for political filing. So that stood out. QB also is a bank that we really, really like. CUBI. It's the crypto banks, the president and CEO coming out. Some might say this is a Piker purchase. I think it's okay because he's been buying. This isn't his first purchase. He's been kind of dipping his toes in a little bit all year. I think we have several filings from him. So the QB stands out. And then if we go to yesterday's list, you got yesterday's list? I don't know if we have it. I don't know if there's time.
I don't know.
There it is. So the Lyft CEO, interestingly enough, $500,000 from the Lyft CEO. Love to see that. That's down halfway down the list there. And then Energy Transfer. Kelsey Warren is always coming out, just, dumping money into his own stock. He's the founder over there at Energy Transfer, but that's a massive purchase, right? Like $47 million. I think the co-founder, another guy, also filed a Form 4. Between the two of them, that's a huge buy. MLPs continue to look pretty good. ET, what is the dividend on this thing? If you look at the chart of ET, it looks pretty solid, and it pays an 8% yield, Spencer. So, I mean, why buy bonds when you could buy MLPs? If you think price of oil and the energy sector is okay here, you get a really nice yield from the MLPs, nicer than even real estate sector. So that's a place for our dividend investors to always be looking, especially in bull markets for energy. And then last but not least, we got the Post holdings. What a chart this is. Staples continue to pop up on our scans. I think we have the Post chart, but new all-time highs for the cereal maker.
This is interesting. In light of the news from the other day, that Mars is not buying like the cereal. Remember, Kellogg's split up, right?
Yeah.
And then Mars just acquired the non-cereal part, so the snack food part of that company. And was it Kellanova?
Yep.
Right. Yeah. Yeah, it was Kellanova, which is the snack foods, not to be confused with. Oh, God damn it! What's the new ticker?
Kellogg. It's just K, isn't it?
No. K is Kellanova. What's the other one?
The other one is KLG.
KLG. Thank you. WK Kellogg. That's the one. That's the cereal company.
Crazy
anyway,
crazy chart.
M&A in Foodland.
All right, Spencer, we got a fast market out here. I say we shut this thing down.
Wait, we got Sean here. Well, actually, before we do that real fast, Hot Corner, guys, get it. It's free. It's a daily note. It takes maybe 30 seconds to consume and internalize and understand. If that, QR code on the screen, link in the chat. Every day there are filings. Every day we go through them, put the most important ones together in an email for you. Get it? Got it? Good. We got Sean here. So we got to at least say hi to Sean. Can't let him go without, seeing what's up. So we'll bring Sean on, and then I'll talk about Disney or whatever if you guys want to hear about that, and then we'll hop. Let's do that.
You guys want to end the show before your resident half Canadian gets to weigh in on all this Canada talk? Unbelievable.
All right.
What's your take on Tim Hortons? A lot of drama in the chat about Tim Hortons this morning.
Tim Hortons is an A+, 10 out of 10 when it comes to donuts. Coffee, ugh. Coffee, no good. Coffee's no good. And I know this because growing up in Buffalo, New York, Tim Hortons is everywhere because Buffalo really is just a suburb of Toronto. So I feel qualified to weigh in on Tim Hortons, and I love the donuts. Donuts are great, but the coffee is it's
For the record,
strong, it's
I also
bitter.
feel qualified. I'm also qualified. Tim Hortons is all over Southeast Michigan, Detroit, suburbs, everywhere.
Both
Right?
Canadians. Yeah.
I will say I'm having some severe FOMO knowing the JC's in Toronto, and I'm not there with them because Toronto is one of my favorite cities in the world. I love Toronto. It's been way too long since I've been there. Need to get back ASAP. Anyway, let's talk about this bull market. It's back, baby. If you were Spencer Israel or anyone else who went on vacation for the last 2 weeks and came back to your trading desk and looking where the Qs are, where the S&Ps are, and where a lot of the stocks that we follow are, you wouldn't even know that anything weird happened over the last 2 weeks. We are back in bull market mode. I don't know about you guys, but I'm looking for bullish trades. I'm looking for bullish setups. I'm looking for stocks that held up well in the way the market reacted over the last 2 weeks, because those are going to be our new leaders going higher.
Yeah, it's like, where have the sellers gone, right? It's like they didn't even take a shot trying to revisit these lows. So that can only be a good thing. We're just dripping higher steadily, day in, day out. So I'm with you. I'm looking.
You guys were talking this morning when JC popped in real quick about how it's unbelievable the reversal that the VIX chart. I mean, we don't do technical analysis on VIX charts, but unbelievable that, I mean, you can't even call that a rainbow. I mean, that was a straight up, straight down. I mean, unbelievable U-turn. I think last I saw, VIX has like a 15 handle on it right now. I mean, unbelievable. If you would have told me 2 weeks ago, Strazza, that VIX would be at 15 today, I would have laughed you out of the room. No way. But here we are.
Epic collapse, blow off top in the VIX. Literally the moment it spiked. We were talking about it that morning. It was up almost 300%. That was it. Heading back to where it started, really, in early July. So
it's unbelievable. Hey, you know what? Maybe there is something to all this talk that happens every summer in August about all the juniors on the trading desk and stuff getting weird. Maybe there is something to it. I don't usually buy into those conspiracy theories, but I don't know, man. That move that we saw 2 weeks ago.
You're saying the interns did it?
I might be saying that. I
mean, look, that's like whipsaw hunting season. You tend to see that a lot during the last week of the year too, the July 4th week, often, where you get a big move and then it's just completely reversed. That's what's really gone on since the Monday that the VIX spiked.
I mean, we talk about all the time about how when volatility spikes, volatility tends to mean revert. That's something you could bank on. What you can't bank on is the speed of it, right? Sometimes it'll take longer than you expect. Sometimes it'll take shorter.
Yeah.
But the speed at which this volatility has completely reversed, I mean, I don't know if I've seen anything like it. That's crazy.
Yep. And it's not bearish. It's not bearish. I don't know how.
No, it's not bearish at all.
I do know it's not bearish.
No, definitely not bearish.
But, it's other stuff too, Sean, right? Like currency markets have really cooled off and chilled the hell out. Volatility is really abated there. The same with the bond market, right? We had some wild bond market volatility also early last week. And later, the couple sessions before that, the week before, that stopped. Credit spreads, like literally credit spreads were screaming higher when that was happening to the volatility index just early last week. That's totally come in. So a lot of that damage has either completely been repaired or in large part been repaired. So that's all bullish developments for now.
Yeah. Well, hey, Spencer, forgive me throwing this little teaser out there, but Steve and I did something unusual yesterday. We recorded an episode of the Off the Charts podcast, just me and Steve, kind of a special episode talking about the psychology that traders just went through over this last couple of weeks. I think it's very poignant. I think it's very relevant to what's going on right now. Excited for all you guys to see it tomorrow.
We had a great discussion. Tomorrow?
It's coming out tomorrow. Yeah.
Great. Awesome.
Great discussion.
Some of the bad decisions that were made in the Strazza portfolio over the past few weeks. Definitely tune in.
Yeah. Yeah. All right. Well,
let's do some recess maybe.
All right. Let's do it.
And maybe we can go make some trades maybe.
All right.
Strong opinions about Tim Hortons. Is this like a political thing? Is this one of those like political?
Canadians are very sensitive about their Tim Hortons. They take ownership of Tim Hortons. It's their baby. I get it. I mean, look, Americans feel that way about certain things, and Tim Hortons is their thing. And they're everywhere. Like we have Starbucks everywhere. In Canada, they have Tim Hortons everywhere.
I always equate Tim Hortons to like Dunkin' Donuts. Like to me, they're the same thing.
I think it's better. Their donuts are better. Their Boston cream donuts are out of this world. Somebody in the chat said it's trash. Well, I don't know what you go to fast food restaurants for, because I'm there for the trash. I don't go to fast food restaurants where the food is not trash. So I don't know.
The Canadians are very proud of two things. They're proud of their coffee and they're proud of their beer. And they're proud of their hockey, but that's a different thing.
And their syrup.
Oh yeah, if you're talking about Quebec, syrup is a big deal. There was an excellent documentary years ago on Netflix about the syrup business in Quebec, and it's like it'll blow your mind. Like there's like mobsters involved. There's violence involved. It's like a crazy thing.
I think I watched that. It was years ago, right? I think I watched that.
Yeah. It was like 5-10 years ago.
Yeah.
Is Quebec the prettiest? Is Quebec City the prettiest city in Canada?
I have not been, but I would not be surprised if it is. I've been to Montreal. Montreal is absolutely beautiful.
Yeah.
I recommend the summertime, not the wintertime. But I've not been to Quebec City. But from what I've seen, as a longtime hockey fan, who grew up with the Quebec Nordiques being a thing and seeing games in Quebec, and they're showing the city during the game, looks beautiful. I'd love to go visit. All right, my recess real quick is this week here in Colorado where I live, school starts early. My son started school this week, 5th grade, his last year in elementary school. He's the kings of the school, him and his buddies. I just saw him off just now.
They start now?
They started on Tuesday.
Oh,
wow. We start school early here, but the trade-off is school's done before Memorial Day every year, which I like. I think that's great. Because where I grew up in Buffalo, school went to like the last week of June, which I always thought was crazy.
That's how we did it.
Yeah. That's a Northeast thing, I think.
I think it is. Awesome. 5th grade. It's a good grade.
It's a good grade. Yeah. And me and my boy are going to celebrate the start of school this week. My boy joined Boy Scouts this summer. We're going on our first camping trip this weekend.
Wow.
Overnight camping trip up in the mountains. It's gonna be a great weekend. So I'm looking forward to that.
Very cool.
That's all I got for recess. How about you, Strazza?
Steve, you got anything?
I got nothing today.
Cool. I'll share a couple pictures from the last week. I do want to apologize for this first one. It is not in a landscape mode. It should have been a landscape mode, but I didn't have time to take a good picture.
Spencer, was your wife with you, or were you literally doing this alone?
No.
I have a real problem with people who don't know how to use landscape mode on their phones.
I will explain. This is a picture of the Star Wars Rise of the Resistance ride at.
You there alone? Answer my question. Did you go to Disneyland all by yourself?
No. I went with my wife.
But say that, because you sound like a creep. We got hundreds of people watching, listening to you. It's making it sound like you went to Disneyland all by yourself.
No. So here's the thing. So this is from like the middle of it's not even a ride. It's like an experience, right? This is from the middle of it, and the whole thing about this experience is you feel like you're in like a movie, like a Star Wars movie. There's like a plot.
An AR headset on. Do you have an AR headset?
No. But
okay,
they shepherd you from like room to room, and the employees are all dressed like in Empire garb, and they're like yelling at you to like move, like keep walking. So like you're being like heckled. And I tried to get a picture real fast because I thought it was a really cool shot here. You walk out and it legitimately feels like you're on a ship, and that feels like space right there. But I didn't have time to like get a good picture because like they're like shepherding you like sheep to move. So anyway, it was an awesome experience. Definitely the highlight of Disneyland is the Star Wars Rise of the Resistance ride. It was fantastic.
And this is somewhat new, from what I understand, right? All the Star Wars stuff.
Yeah.
Disney, right?
Yeah, I guess so.
I would love to check that.
So didn't have time to take a good picture. I apologize, but it was so well done that I just had to. The next slide is just blue milk. If you like Star Wars, you know the blue milk, the thing.
Shout out Dr. Horton in chat. Great zinger right there by Dr. Horton in chat.
Yeah. Oh, look, I again, and there's actually another picture here that also I do need to apologize for. It's not this one. This is just on Monday. Yeah, Monday, the day after Disney, we went to the Warner Brothers studio, took a tour.
That's cool.
A lot of good stuff there. The next picture is one I need to apologize for. I took this while on a moving tram. So I did the best I could, and I was back. I had to turn around. It was backwards. But if we have any Pink Floyd fans out there, this is most of the album cover for "Wish You Were Here."
Really?
I didn't get the left-hand part, but again, I was on a moving tram and I was backwards. So forgive me for that. But this is the shot from the album cover. Wish You Were Here.
So those two photo bombers are nobody important. Is that what you're telling us?
No, nobody important.
That's not David Gilmour. No.
Yeah, I thought you were going to tell us that was Tom Cruise or something.
They told us that people were I don't know if they're just if they say this to everyone, but they said people are shooting here today. Like the people are working on the studio. If you see them, like don't like run out, don't jump out, and like don't greet them or don't yell because like people are working. So. You got to be like somewhat quiet, but it was really
their
cool.
work zone. I had a friend who used to work for Sony Pictures, and he took me on a tour of the Sony lot. And yeah, I got the same disclaimer, like you're gonna see people don't acknowledge them.
Right. Yeah. Really cool experience.
Which is true.
Though.
I did.
Yeah, really cool. We did not see anybody that we knew, but a really cool experience. Warner Brothers, huge fan. Obviously, Looney Tunes, Lord of the Rings, DC movies, Batman, the whole thing. So. Great experience. Maybe I'll show more pictures tomorrow, but that's kind of just a few from my
week.
week.
Strazza will be in the LA area next month, and we will not be doing anything touristy like that.
I'll go to Disney World with you. Land.
You want to go to Disney World? Let's go to Disney World.
Disneyland.
It's Disneyland.
You should.
It's different.
You really
I don't know
should.
If you have time.
Yeah, just you have to plan it. I feel like Disney, and this applies to Disney World, Disneyland, any big park like that. If you go without a plan, you're gonna have a bad time. You really have to. If you want to get the most out of it, you need to have the app. You need to have the lightning lane thing. And you have to be strategic about your day, because we were there for 12 hours. We only spent about 90 minutes in line throughout the day. Right?
Did you get like the fast pass or whatever pass that you get?
Yeah.
Okay.
But there's time windows, so you can only you do a lightning lane, you have an hour to go to do that ride, and then your thing expires, right? So,
well, Spencer, let's bring this back to money real quick, because it's well known that you're a Disney investor. After this experience, how do you feel about your Disney investment?
I've always felt good about Disney as a company. I have a lot of good, positive feelings about them as a brand. And about the product of which Disneyland and Disney World are the crown jewels of the Disney empire to me. I don't feel great about being a shareholder right now. I haven't for some time, but it just reaffirmed how amazing Disney is as a company, as a company that profits in experiences, because it was a great experience. It was tremendous. I
remember when JC went a couple of years ago with his family. He came back and he was very bullish on Disney. He was talking about their margins. I think he paid like $15 for a hot dog or something. He couldn't stop talking about that.
Yeah. I mean, food's a little pricey, but it's a theme park. Not sure what you expect. But yeah, great time. Disneyland, I highly recommend if you haven't been there. I had not. All right. That's what we got today. We'll end a few minutes early because JC's not here, so he doesn't know. It's Thursday. Chart Request live at 1 o'clock. Options Jam session with Sean at noon. We'll see you there. Thanks, Tyler Wood, for hanging out. Thanks, Sean, for hanging out. Thanks, Chad, for hanging out. Go make some money. And we'll see you later.
Bye, everybody.
Good to be back.